Hi, welcome back to my channel. I'm Cassie Villela, and I'm a realtor, property manager, and investor here in San Antonio, Texas. On my channel, we talk about all things real estate, from data to home design. So if that's your cup of tea, please like, subscribe, follow. I'm on all of the social media, you know the drill. So today I'm really excited because I'm going to present a summary on the 2022 housing forecast that was produced by SABRE, that's the San Antonio Board of Realtors, a little over a week ago. So the speakers were great. We had representatives from government, we had both private and publicly funded research centers represented, we had new builds, lots of different things, lots of data. Here we go. I'm gonna try my best to summarize it and not just reiterate the whole 3-hour event, but I'm really excited about it, so we'll see how that goes. So here's the speaker lineup. Started out with Judge Nelson Wolff, who's the judge of Besar County, and he gave a sort of state of the county speech. Senator Jose Menendez and Senator Donna Campbell gave a legislative update. So, you know, in Texas, the odd years are the years that we have a legislative session. And so we're just coming off of the last legislative session. So they were there to kind of talk about what bills were passed that have anything to do with real estate. Grant Lopez gave us a builder's update, so a lot of information about new builds from the past and looking ahead. Dr. Luis Torres from the Texas A&M Real Estate Research Facility. Ugh, that's such a word jumble, but he is a research economist. He gave a residential forecast. Danny Khalil, a senior analyst at CoStar, gave a commercial forecast. And there was a keynote by Ryan Serhant. He was more talking to realtors though, and he's a famous broker. He's on TV. He didn't present any data, so I didn't include anything he said, but he was there. Judge Nelson Wolff, so he didn't really have like a PowerPoint. There weren't any graphs, but he just talked kind of about what he sees coming down the pipeline for San Antonio, for Besar County. I just jotted down what seemed like it would be important to real estate investors to know about. So a couple of the things: University Health System acquired 80 acres on the west side, so 1604 and Shanefield Road. There's going to be a huge hospital facility built there. And then they also acquired 45 acres near Retama Park in Selma. So we've got 2 large hospitals being added, and in places that really have had a lot of growth and that really need it, so that's great. That is going to affect prices in the area. That's going to bring higher paying jobs to the area. So if you're an investor and you're looking for a great rental market, you know, Shanefield Road has a lot of newer housing built, and you know, a lot of reasonably priced housing that would make good rental housing. So that might be a good place to look now, now that you know that that is coming in the future. It's not being built yet, but it will be. He also mentioned that by 2027, I-35 between 410 and 1604 is going to have an upper level. So that, I hadn't heard that before. I'm sure it's been talked about, but in downtown we have where the highways split into upper and lower levels, where they weren't able to expand the highways to add more lanes. So that's what's going to happen, which is great because that is a parking lot most days during rush hour. So I think that's going to really help. But you know, we're looking at growth, additional growth out on the northeast side of town. Investors have been looking in that area for years now, but it looks like it's just going to continue to develop. He mentioned that TxDOT and Besar County are investing $2 to $3 billion in infrastructure over the next few years, primarily talking about roads. They're expanding 1604 on the north side to be just gigantic because there is so much traffic there. And you know, it's definitely needed. We have so many people moving here. Our population is rising so quickly. So, you know, they're just trying to keep up with that increasing demand. Another thing that he mentioned is that there is going to be 7 miles of new highway built out on the far west side, so out on like Potranco and 211. So that has been a really big problem area for the last couple of years because as we run out of land, you know, inside of Loop 1604, new builders are having to go outside of the loop and go further and further and further out. And so on the far west side, they've gone so far out, but there aren't really highways. So you've got a just regular road with regular traffic lights that you've built hundreds and thousands of residential houses miles and miles down this road. So what's happened, and if you live over there, you know this, but like Culebra, Potranco, they are just, it's horrific. It's really, really hard to get into town. It's really, really hard to get onto 1604 if you live out there. So they are trying to alleviate that. And to me, that is huge because what I see as a realtor is people will move to San Antonio from out of town and they'll move into one of those neighborhoods and they'll want to move pretty much immediately because they realize how bad the traffic is and just how far away from everything that is. So I think that this highway will help a lot because if they can get down to 90, they can get into town pretty quickly. So I think that that was probably the biggest thing from Judge Wolf's speech that I took away is like, okay, that side of town, I've been like, you know, if you want to look at a house there, I'll take you, but like the traffic is really bad. So I'm glad to see that that's going to be helped. I don't know how quickly that will be though. He talked a lot about manufacturing. So a lot of manufacturing coming into the south side. And he talked about, I think the county funding some manufacturing training at Brooks City Base. So, you know, all around Brooks City Base might also start to, there's already a ton of commercial growth there, but we're going to see some more manufacturing growth. So that was Judge Wolf. So moving on to the legislative update. So like I said, we had Senators Menendez and Campbell. They talked about a lot of things. I mean, politicians, right? But the two that actually had anything to do with real estate are HOA reform and property tax changes. So the HOA reform, I'm actually going to make a full video about this and release it soon because there were several different bills that targeted HOA reform. But the kind of the main premise was that previously laws were written that were heavily weighted towards the HOA versus the homeowner. So they favored HOAs over property owners. And this year, it was a bipartisan effort to kind of reverse that and say, no, the homeowner needs favoring over these HOAs because a lot of people have complained a lot about the power that HOAs have. So they tried to kind of pass some laws that help out homeowners. They capped some of the fees, which I think is probably the best one because sometimes those like resale and HOA documentation fees are outrageous. They, you know, Senator Menendez specifically mentioned solar panels and said that they made it to where if you want to have solar panels, your HOA cannot prevent you from having solar panels. Security cameras, security items, like if you have a pool, creating a gate, some of those kinds of things that are kind of, you know, giving the property owners the rights to do what they want on their property within reason. Some of those were kind of put into effect. So, like I said, I'm going to do a full video about it because I think it's really exciting. I think it's really good. It's really needed. We'll go over that in a different video. Property tax changes. So the residential homestead exemption, if you are not from Texas, we have really high property taxes. We don't have a state income tax. We use property taxes instead. And so we have pretty high property taxes. And we have a homestead exemption where the house you actually live in, you can claim an exemption and get your property taxes lowered a little bit. So in the past, that little bit was that it would decrease the valuation of your home by $25,000. So the discount on your property tax would basically be $25,000 times whatever your property tax rate is, whether it's 2%, 3%. They have increased that, or they want to increase that from $25,000 to $40,000. They put it on the slate of things that Texas voters will vote on. I can't imagine Texas voters not passing lowering their own property taxes. So we can kind of assume that that will happen soon. So you'll get a little bit more of a break on your residential homestead. Another thing they changed is in the past, you had to start this residential homestead exemption on January 1st of the year after you bought the home. So if it wasn't already in effect when you bought it, for example, if you buy a home from an investor who had renters in the home, it didn't currently have one. So that buyer would have to actually pay the higher taxes for the rest of that year. And they changed that. Now it goes into effect immediately. So again, just kind of saving money on property taxes a little bit. So next is the Builder's Update by Grant Lopez. So he talked about a few different things. He talked really fast and threw out a ton of data and did not have any slides. So I just wrote as fast as I could. I missed a lot, but I think I caught the most important things. So here we go. The inventory. Everybody in real estate, that's like the word of real estate of 2021 was inventory. We have no inventory. We have 1 month of inventory. That's it. And that's kind of the theme of the builders as well. 20,954 units were started in 2021, which was a 28.2 increase over 2022. So we did have a lot more homes built last year, or started last year than the previous year, but it's still far behind demand. He mentioned that in the third quarter of 2021, we were the 9th in the whole country. So San Antonio was the 9th in the USA in new home starts. He mentioned that 22,500 new starts are scheduled for 2022. And you might be saying like, okay, so that's really not that many more than this year, but we have this huge inventory problem. We have so many people moving here. You know, how is this happening? We need more new builds, right? But they're really restricted by lots and by inventory. And what I mean is they're just sort of running out of land, right? Like San Antonio is already sprawling and there's just not that much development left to do, like anywhere close to the city center. So, you know, that's a big factor. Like if you don't have lots, you can't build houses on them, obviously. And then inventory, by this inventory actually mean like lumber, supplies, steel, labor, the things needed to build the homes are not there. And we all know that we've got supply chain issues on all kinds of different fronts. And that's affecting the builders as well. So he also talked about basically prices are skyrocketing, and we all knew that. Like, I'm not telling you anything you don't know, but he kind of had the data to show just how much. And even though I like do this every day and have talked on a monthly market update about how much prices are skyrocketing, I still was kind of blown away by some of this data. So the biggest thing, and it, you know, multiple speakers talked about this, but the biggest thing is that there are just basically no homes under $200,000. Having a home, buying a home for under $200,000 in San Antonio is a thing of the past at this point. So he talked about with new builds, in 2020, 2,000 homes were built that cost under $200,000 new. And then last year, 2021, that dipped all the way to 645, and that was a 67% drop. And then with inflation and with all of the problems I talked about before, there are basically going to be none in 2022. Like it's gone away. They don't exist anymore. And so even just from 2020 to 2021, that's a 67% drop in the number of homes available in that affordable price range. So that really is making it so hard for first-time home buyers, for people who are trying to make that transition from renters to homeowners. There just aren't that many homes. under 200,000. And, you know, even small homes. So builders build 1,000 square foot homes, and to know that there aren't even 1,000 square foot homes under 200,000 is kind of mind blowing to me. How much are the homes costing then? So we basically, then he jumped to 300,000 to 400,000, that price range. In 2020, there were 3,042 homes built in that price range. And in 2021, that jumped to 6,064 homes. So a 99% increase in that $300,000 to $400,000 range. And then from $400,000 to $500,000, in 2020, we had 1,052 homes. 2021, that jumped to 2,142 homes, which is a 104% increase. So you can see that basically all of the new builds are going to be in these much higher price brackets. And here's one thing that I found, I think is the biggest indicator. There was a study done, a comparison of identical floor plans from 2020 to 2021. So they surveyed builders, your identical floor plan, the same exact house, when you built it in 2020 versus 2021, 99.9% of the floor plans saw a major price increase. The average increase, floor plan to floor plan, was $78,750, like $80,000 from one year to the next for the same exact house. That's a 23.2% increase. If you were in the market in 2020 and you were like, man, these prices are just going crazy, I'm gonna wait for things to slow down a little bit. In 2021, the same exact house was then $80,000 more expensive. And that's just continuing. We see lumber, everything's going up. That's just going to continue to happen. But that just kind of blew my mind, like the same exact house costing so much more. The last thing he talked about, we mentioned earlier that one of the things that is lowering the number of homes that can be built is a lack of land. And so the lots are getting smaller and smaller. So when I say a 40-foot lot, it basically means along the front. Like, so if you're looking at the home, the lot size this way, 40-foot lots. In 2020, there were 2,250 lots, or yeah, 2,250 lots. There were 40-foot lots. In 2021, that jumped to 4,500 lots. So basically it doubled that smaller lot size. And then under 40-foot lots, in 2020, there were only 500 lots that were that small. In 2021, 4,500. So we're just seeing these lots getting so small. And the thing that worries me about this, because I have looked at some of these neighborhoods where the homes are so close together. And another thing that they're doing is making these homes with like a one-car garage or maybe no garage at all. And then they're squeezed in right next to each other. So those neighborhoods are going to have parking issues in the future. Like, there's just not enough street parking for all of the cars that people are going to have. So if you have a 3 or 4 bedroom home, you probably have 2 or 3 cars in a city like San Antonio where you have to have cars. And if the lots are this small, you're not going to have space. So that's a big problem that, you know, if you're in the market, you're looking at these new builds and you see this, just take that into consideration. All right, so on to the residential forecast. So this was from a research economist at Texas A&M Real Estate Research Center, which is actually a publicly funded program, but it's just through Texas A&M. Dr. Luis Torres is a research economist, very smart man. So he started out talking a lot about the pandemic and kind of why the pandemic affected house prices and how I feel like a lot of that we kind of have already talked about in other market updates and things. But, you know, a couple other things mentioned were that the reason the pandemic has not harmed the housing market is because most of the people affected by the pandemic were renters, not homeowners. And so we have seen a little bit of a slowdown in the number of renters being able to move into home ownership, but we have enough homeowners wanting to move to other homes because of being quarantined that it kind of caused more of an increase in sales, not a decrease. So that's kind of the short version of why the pandemic didn't, lead us into a collapse or anything like that. This first chart here kind of shows that San Antonio has recovered most of the jobs lost during the pandemic. So a lot of those have come back, especially in hospitality. And then we added jobs, of course, in like healthcare and things. So San Antonio as a whole, our economy is running, basically we're at pre-COVID levels for the most part. We talked about already how the under $200,000 home is basically a thing of the past. This is another chart from a different source that also is kind of painting that picture for us. You can see that that blue line, it spiked in 2008. It has just been on a steady decline, and now it's basically at zero. It's gone down to almost nothing. You can see the red line, which is the 200 to 300,000, is also starting to go down. It went up briefly. I mean, not briefly. It's been on an increasing trend for a long time, but we saw a spike during 2019, 2020. But now it's decreasing, and you see that that yellow line, 300,000 to 400,000, has had at the same time a sharp increase. Basically what's happening is as the prices increase in value, the lines that are starting to go up the quickest are going to be the 300,000 and over line. So previously what was kind of like our luxury market in San Antonio is now kind of the standard. Okay, so inputs to single family and multifamily construction. Inputs meaning materials used to build the homes, also labor cost as well. You can see this just extremely sharp increase in especially 2021. You can see basically there where we all know the story, like the lumber prices and steel prices going up so drastically. But even though I'm aware of that and I do a lot of renovations, and so I know that the prices have gone up, just kind of seeing it on this scale, comparing it to the past 6 years, and just how much it really has gone up kind of blew my mind. And then these next two charts will really blow your mind because he goes back, Dr. Torres goes all the way back to the 40s to show us just how unprecedented these prices are. So these are just lumber and steel mill products, but you can see, that line just skyrockets in the past year to 160, 140% increase of year over year. So, of course, when you look at these charts and you see, okay, the price of lumber went up 160%, then it starts to make more sense why the same floor plan is costing $80,000 more, because literally the materials cost that much more with the inflation we've seen and with the supply chain issues we're having. San Antonio housing sales, this is once again another, there are no more $200,000 or less homes, showing that once again, anything under 300,000 is decreasing, and we're making up for that in the $300,000 to $500,000 range for the most part. You can just see those sharp increases, and that's what's driving our median price up so much. That's why we passed 300,000 as the median home price in San Antonio this past year. Days on market, we've looked at a lot of days on market on my monthly market updates before, but this, I like how it's broken down. I like how it goes back 10 years. That's really nice to see. But you can, in that scope, you can really see just how drastic it is to have 20 days on market for most of our price brackets. And then even to see that even the 500,000 plus, so that's like your ultra luxury in San Antonio, is pretty low. Like for that price range, it's historically so low. So single family housing listings. So this This graph is interesting to me because if you aren't aware, so when I list a home on the MLS, it goes on the MLS and it has a status. So the status is either going to be new listing, active option, like once it goes under contract, pending means it's like being, it's in the process of closing, or active. It stays new listing for 10 days. And then it converts, if you don't put it under contract, it converts to active listing. So normally, active listings are going to be way higher than new listings because new listings are only new for 10 days. And so there should be a lot more active listing, right? But what's happening is that they are basically the same now because the homes are going under contract so quickly that they never even make it to active listing. They go under contract within the first 10 days. And so that is why that active listing has just really plummeted in 2020. And you can see that it was pretty consistent back in the last decade. And then all of a sudden when we have the sharp, explosion of the housing market, you can see how it goes down to basically very few active listings. This is a really interesting chart to me because, and Dr. Torres said that this is probably the best indicator of price because it is repeat sales. So it's tracking the same exact property over time. So you're not taking an average. It's not skewed by like, well, maybe this neighborhood or that or whatever. This is the exact same home year over year price change. And so you can see that blue line, Austin. We all know that Austin is just going bananas. But even the rest of Texas is also experiencing this just double-digit year-over-year change with the same home year to year. I think that really shows you just how much prices have increased, and you can really see how that starts mid-2020. Things are, the year-over-year growth is under 10%. For San Antonio here, it kind of was around 5% from 2017 through 2020. And then all of a sudden it's jumping up to almost 20% currently. I also like this chart because it compares the 5 metro areas in in Texas. It does split up Dallas and Fort Worth. So that's why there's 5 and not 4, because we kind of think of DFW as one, but with real estate, it really needs to be 2 separate markets. But you can see here that San Antonio is still one of the more affordable places. The only metro area that is lower than us is Houston, but we're still talking about 15 to 20% appreciation year over year. We're still talking about a $310,000 median house price in November. All of the markets have seen pretty substantial and pretty stable growth. Not stable, but similar growth. There's the word. I knew it was an S word. Median home price. And again, this is another one of the charts that compares all of the major metro areas and then has the blue line is the whole state. So you can see again, we are sort of at the bottom. We're the most affordable out of the markets. You can see Austin median home price right now is $475,000. But San Antonio is right around that $300,000 mark, pretty much tied at this point with Houston and Fort Worth and the majority of Texas. The only places that are higher is Dallas, Plano, Irving, and Austin Round Rock. But again, you can just see that all of the metro areas, there was this chart goes back to 2007. You can see that from 2011 to 2020, there was just kind of this nice steady growth, and then all of a sudden over the past year it skyrockets. So out-of-state migration into Besar County. So this was really, I was really happy to see these numbers because, anecdotal evidence, right, as we're working in this housing market. We have buyers calling. Anecdotally, it feels like most of the buyers are coming in from out of state. You know, we have just California's like flooding over to Texas. They don't even have U-Hauls in California because they all brought them to Texas and all of this stuff. So it was really interesting to see actual numbers for that. You know, I was actually surprised to see that actually 81.7% of purchases in 2020 were people moving from one house in Texas to another house in Texas. So we still had, you know, the huge majority of people are still moving within the state. But I think as anybody active in the real estate market here in San Antonio could tell you, out of that remaining, you know, 19% that are moving here from out of state, the vast majority of that group is from California. The way this chart, you know, reads is a little bit confusing because then it says California 14%. Just keep in mind that that's 14% of out of state. You know, it's not 14% of the whole market. It's actually 2.6% of the whole market. So 2.6% of buyers in 2020 were from California. The other states listed here, I suspect, are kind of military bases and people moving about, you know, with the military. Florida was another pretty big, big state that we have a lot of people coming from, and then the rest are kind of all tied. And then he broke it down by city, not necessarily just state. And so LA, San Diego, the biggest ones, but you can see there Orange, Riverside, San Diego, and LA, all from California, are kind of like the big majority of people moving here from California. Everybody knew that already, but it's kind of nice to see just how many. Holding period has increased over time. So basically what this means is how long are people staying in their homes once they purchase them. And so you can see that, you know, 2013 was the lowest. You know, people were staying for about 4 years, between 4 and 5 years. Slowly that's gone up. And then 2021, it's the highest it's been. It's well over 54 months. And the reason that this is happening, and I actually am going to do another video about this too, because I read an article in the Real Estate Centers magazine that they send out about, you know, how long people are staying in their homes is kind of like the most in recent history is pretty high. And the reason is because interest rates have been so low. And then now the housing market has gone bananas. And so to try to move, you're looking at like a payment that's really, really low compared to what you would get if you moved. And so, and now kind of a lot of people are, you know, not trapped in their homes, but I do have a friend who's like, I'm trapped in this house because I have such a low payment. My husband's never going to let us move because it's just such a good deal that we have compared to the current market. So that's kind of what's happening there. I really like this this chart because a lot of people want to say like, oh, the reason the housing market's doing this is because investors are buying everything and you can't buy a house because all these investors are paying cash and buying up the whole market. Well, that really is not true. Like the last 10 years, it's stayed pretty much consistent what percentage of the market has been investor buyers. So you can see this chart goes back to 2012. You know, it's peaked a couple times at 24%, but right now we're around 20% of homes are bought by investors. That's pretty consistent with the last decade. That's in San Antonio, but all of the metro areas are listed here, and it's kind of the same story for all 4 of them. One of the questions that Dr. Torres said that he gets asked all the time, I get asked all the time, is this a housing bubble, right? Everybody's so worried this is another 2008. He pointed out, though, that some of the characteristics of the last housing bubble were loose lending standards, lax oversight, and lots of speculation. And those just aren't the current situation. We have a very low inventory. We have a lot more buyers than we have homes. So even if there are some foreclosures and things, it's just not going to impact the housing market like it did last time. These are the words of Dr. Torres again. He brought up this chart that goes back to 1980 that shows basically when that line is 0, and anytime the line is going up, prices are increasing. Anytime the line is going down, they are decreasing. There are only a few times that in San Antonio that has dipped below the 0 line. So we had a big dip back in the late 80s. So it, that's when I was born. So I don't remember that, but I know that my parents talked about like that being a really rough time for the economy, and San Antonio was really hit very hard. But since then, there have only been a couple of times. The IT bubble in the late 90s, there was a slight dip below 0. And then even with the most recent crash, so 2008 housing bubble, you can see that we only had brief periods, very brief, like less than a year, where it dipped under 0. And even then, just barely, just a tiny amount where it dipped under 0. So even in this catastrophic housing bubble burst that we had recently, San Antonio was not hit very hard. We may see, housing prices stabilize or maybe even decrease a little bit, but they're not very likely based on the history of the last 30 years. San Antonio has been a very stable market. So I like this chart. It really reassures me even because I see these prices and, having grown up here and seeing these prices go up so quickly has been worrying me over the past couple of years. But it seems like the fundamentals of this market are very strong. He talks a little bit about the amount of homeowners that are in forbearance. So right now, the Mortgage Bankers Association reports that 835,000 homeowners, that's 1.7% of all home loans, are in forbearance. That's of December 20th, 2021. So that's pretty recent. Once forbearance ends, so we remember the forbearance was the government's response to COVID, saying like, we're not going to foreclose if people get behind on their mortgages because we cannot have people losing their homes in the middle of this problem. So once forbearance ends, it's unknown how many people are going to be able to make those payments. So we don't know if there are people who just, okay, I'm going to file for forbearance in case I lose my job, but then they didn't and they're fine. A lot of people, when this first started in March of 2020, were like, I don't know what's going to happen. Even we were like this. My husband's in the oil field. We were just like, we don't know what's going to happen. We were very nervous. So a lot of people applied for the forbearance who maybe didn't even need it. So that's part of it. But we can expect that some of those loans are going to go into foreclosure at some point. However, the housing market as it currently stands could easily absorb those foreclosures because of our inventory shortage. It would actually help the inventory shortage in a way. With this data in mind, it's not very likely that we're going to see some kind of, bubble bursting anytime soon because, like I said, inventory is not keeping up here in this local market. This chart kind of goes back to, again, the 80s and shows, just kind of that we expect a certain percentage of mortgages to be past due, right? There's always going to be some percentage that are 30 days past due, 60 days past due, and 90 days past due. People have emergencies, things happen, jobs get lost. It's ever present, right? So you can see that these lines are pretty much stable over the past 40 years, with a couple of exceptions. So obviously we see the last housing bubble, we see a pretty big spike. But we see in this last year, the 90 days and over kind of skyrockets there to past 5% of all mortgages in Texas. But again, that's tied to that forbearance program. So we don't know, you know, are people going to catch up on payments once that ends? It's really unknown. So a lot of people are holding their breath, like what's going to happen when the forbearance ends. It does say that 12.4% of active listings and 20% of pending listings, or almost 20% of pending listings, are included, are past due on their mortgages. So that tells me that people are, if you're unable to catch up once forbearance ends, in this market, you can easily sell your home and get out from under that mortgage. So people will have that option. It's not like they have to go into foreclosure because nobody's buying homes, you know. Mortgage rates are increasing. The Fed has already said that in March they're going to increase mortgage rates. So that's another unknown, kind of how is the market going to react to that. We do think that mortgage refinancing will slow down a lot because, you know, pretty much everybody who was going to refinance has already done it. The rates have been extremely low over the past year. And so we'll probably see refinancing go down quite a bit. But as far as new loans, in other words, people buying homes with a new mortgage, you know, we don't know how the rate rise will affect that. We talked in an earlier slide about how people are holding on to their homes longer. People are staying in their homes longer because they got them under a low interest rate. So we may see like less mobility. We may see people moving a little bit less if rates go up a significant amount. But we still have a lot of younger millennials coming into the market who are wanting to buy, who are wanting to go from renting to owning. So it's, you know, those people are still going to buy even if rates go up. That's going to be their situation. They're going to have those higher rates, although we may see prices kind of accommodate those higher rates, if that all makes sense. Okay, so that was the residential forecast. I know that was a lot of information. He had 45 slides, and it was very hard for me to pare down to just the slides I showed. So I know you're like, that was a lot, but it was way less than I would want to talk about because I felt like every graph was excellent. So anyway, commercial forecast, Danny Khalil from CoStar Group. So CoStar Group, you may recognize the logo if you, like me, used to use Cozy, and then Cozy got bought out by apartments.com. It has a similar logo. CoStar owns apartments.com along with other websites, and they are basically a data firm. And so Danny was presenting some of their proprietary data. I did get permission from CoStar to use these slides. If you are a large investor and you're wanting some large scale data on like apartment buildings and things like that, they have products. They just have all kinds of data that you can use to inform your investing decisions. So I definitely recommend checking out CoStar.com. Not sponsored, but I feel like since they gave us all this great data, I should, you know, tell other people about them. I did tell Danny I would like them to create some like smaller data packages for like individual investors who are just trying to get a read on markets. I feel like that would be really helpful. I'm not like a gazillionaire who's like has millions of dollars to spend. So, you know, that's kind of who it's catering towards. But anyway, maybe they'll come out with something. Get on it, CoStar. Annual office transaction volume. So I'm going to go through the different types of commercial real estate. I know that most people that are watching me are residential investors. Definitely hang in till the end because the last one is multifamily. In, you know, multifamily apartment buildings and things like that, which is residential. I'm going to go through the other ones pretty quick though, just to kind of touch on them, just in case you're wondering. Office transaction volume. So this is office buildings, office spaces. You know, during, I don't even know if I'm like, YouTube gets mad if I say that. So sometimes I feel like I shouldn't say that. But during, you know, the last couple of years, 2020, you know, office took a hit. Obviously, nobody's going to the office anymore. But in San Antonio, 2021 bounced right back up to 2019 levels, which were the highest we've had in recent history. We've got $1 billion of transaction volume in office buildings. So offices are definitely still a place that you could look at investing, still going strong in the San Antonio market. Vacancy rates are still very low. Moving on to retail. Obviously, retail was hit hard in 2020, but it's been kind of on this trajectory of being hit by online shopping. So you can see here over, the past 5 years, we've had a lot of retail bankruptcies and store closures. So 2019, we had over 4,000 store closures in retail sector, just from 27 companies declaring bankruptcy. So that was already, retail was already suffering. And then 2020, basically what I think, because you can see this massive jump from 2020, we have 70 companies declaring bankruptcy and nearly 5,000 store closures. And you see in 2021, that goes down to just 10 companies that declare bankruptcy and like barely any store closures. Like, is that like 100? I can't even see the bar on that graph. Like, it's nothing. And the reason for that, I think you could probably guess, is that any store that was gonna be closed, like 2020 took them out, right? Like if you were on your last legs, you're done. Like 2020 wiped them out. So we didn't, we've kind of lost any store that wasn't gonna make it in that 1 year. So now 2021, we have a lot less store closures, a lot less bankruptcies. Vacancy rates did stay, they went, of course, for retail vacancy went high in 2020, but came back down in 2021. On the industrial side, industrial leasing activity is still high. It did go down from 2020 to 2021, but historically, over the past decade or so, we're still much higher than we've been in the past. We talked about how, Judge Wolf talked about manufacturing increasing in San Antonio. We've got Amazon that has leased like 5 million square feet in the San Antonio area for warehousing. So industrial activity is very healthy. The vacancy rate, you can see, has dipped below 5%, which is very, very low for industrial. You can see on the history, the last 15 years, we have like a high of around 10%. And, then it's been slowly decreasing over time. And then over the past year, just really gone downhill. The forecast is for it to continue to dip and then kind of stabilize around 4%. Okay, this is the really cool one. So now we're into the residential, like multifamily, which, isn't single family homes, isn't quite the same as what I do and what most people I work with do, but I feel like they're like sisters, right? Apartment buildings and single family homes, small multifamily. So like I said, apartments.com is part of CoStar Group. So they have their proprietary data on the search activity for San Antonio. And you can see that year over year, there's about a 25% average increase in search activity for San Antonio over this past year. I think that spike in April is probably because this, March and April of 2020 is probably pretty low search activity, so that's why there's a spike. But overall, 25% increase year over year. So a lot of people moving here, not just homeowners, but renters as well. You can see, again, the main line to look at on this chart is the green line, the vacancy rate. The vacancy rate right now for apartments is down to 5%, which is very low for apartments, especially in, compared to the past decade where it's been, fluctuating between 8 and 11%. Normally now it's down to 5%. So that is great news. Even in the midst of all that's been going on, even renters being hit harder than homeowners in San Antonio, it's still, the vacancy rate's at an all-time low. So that is incredible. So I really liked, Danny made a joke and it was hilarious to me. I laughed really loud at the conference and people at my table looked at me like I was a weirdo. Because he called this his Brachiosaurus graph, where, you know, you could see that basically the last 2021 is suddenly exploded to $5 billion in transaction volume for multifamily, whereas, you know, we were under 1 billion up until 2013, then maybe up to 2 billion in 2018, 2019, and then like, bam, 5 billion, 2021. So I love it. Here is some information on, you know, CoStar, their disclosures and everything that they have there, and Danny's info if you want to email him and ask for some data. So that was the forecast. I mean, I could talk for hours. Like, there's so much information there, but, you know, to sum it up, the San Antonio market is very strong. It doesn't look like it's going to be going anywhere soon. It looks like we're going to continue to have people move here. Prices are going to continue to increase. We're going to continue to have not enough inventory. So, you know, if you are kind of waiting around hoping that prices are going to go down, that's just really unlikely to happen. We are going to see rates increase though, mortgage rates increase. So your cost of owning in San Antonio is definitely going to go up very soon. And so there's really no point in waiting. It looks like we're just going to continue to see the market grow and grow and grow. So if you're looking to get in, I would get in now. I'm not somebody who normally says things like that. I'm normally very cautious, but after seeing all of the data and seeing people much smarter at analyzing it than I am, you know, I just feel like, you know, San Antonio is a place to invest for the long run. If you have any questions about that, I have many other videos about the San Antonio market, or you can always email me or go to my website, CassieVillela.com. I will see you in the next video.